investors with money on the line are watching this vote very closely. With us now, right here in the newsroom, Eugene Flood of TIAA-CREF. He is the EVP of Diversified Financial Services. He's been a member of the CREF and TIAA-CREF Mutual Funds Boards of Trustees, the chair of its investment committee. That post he had from 2005 till pretty recently. Gene, we're so glad you could be with us here on this day, which is going to be more or less historic. What does this vote, either yes or no, mean for U.S. investors?
Well, Deirdre, where we're going from here really still is kind of a long path. So there's a lot of things that are yet to happen. So if we get a yes vote today, we still have to they still have to determine specifically how they're going to implement this plan.
Sure, and then, there's a lot of details.
Yes, there's more detail to come. And then as we go past there still will leave open the question of whether a restructuring will ultimately need to happen. So that there's a number of steps left.
From the discussions that you're having in TIAA-CREF, I mean, with preservation of capital as a key goal for your clients, what are you talking about as far as this Greek vote is concerned?
Okay, so with this resolves a little bit of the uncertainty. But as I said, we still have to see whether state-owned enterprises will be sold, exactly what happens during the restructuring. And then beyond this, there are things that have to happen across the rest of the European system. So we need to see what happens with the Spanish cajas in Spain. We need to see what happens with the second stress test for Europe. So there's lots of uncertainty still in the marketplace for us. What this does is it takes that uncertainty down just a hair, but not very much still at this point.
As far as fixed income investments go, Gene, what's the best way to manage it?
Well, with fixed income investing, obviously, you have to be very defensive. And at TIAA-CREF, we have very conservative investment approach with respect to our fixed income portfolio generally. Now, there are some opportunities that could arise here. So with this current volatility...
Would you buy European debt, or is it just way too risky at this juncture?
Well, at this point, we'd be more focused on U.S. debt because the uncertainty that is spread across the market has impacted the U.S. as well. Obviously, we have other things going on here in the U.S. that are pressing U.S. rates. But with the volatility that we've seen lately, there's been some dislocation, and that starts to get us interested. So we're looking specifically in the high yield sector, in the single B and the double B area, for potential places that we could get further involved if the uncertainty starts to resolve itself.
All right, so even high yield in the U.S., even junk debt in the U.S. looks better right now than European bonds. Eugene Flood there with us of TIAA-CREF.